Your Excellencies and distinguished delegates and members from India and Kuwait to this India and Kuwait Investment Forum, Namaskar, Salaam Alaikum, and good afternoon. History tells us that there are times when several economies or regions in the world have an accelerated growth pace. From 50s to 70s, it was an era of Germany, where the country was growing at a rate of 7% per annum. Then came the era of, as far as the China is concerned, between 82 and 2011, Chinese economy has been growing at the rate of 10%. Japan had a miracle period in 50s to 70s when its economy was growing at the rate of 9%. And we heard this morning that it is an era and decade of India where the economy has been growing, and today it is the fifth largest economy in the globe with a GDP of $3.5 trillion. And by 2030, in fact in 25 years, it is expected to become the second largest economy of the world with a 32 trillion GDP. Even if it is slightly lower, we are talking about a 25 trillion GDP and per capita income of 15,000 to 20,000 US dollar, a multi-notch increase over the current levels. Now, how is this possible that India economy can grow or can be the fastest growing economy in the medium term for an extended period? In fact, it has been supported by the economic and major economic reforms which have been going on the fiscal front, on the digital front, on the social inclusion front, and on the major infrastructure development. And it is also supported by India's technology strength. It is supported by India's large and deep pool of the human resources, which today is 550 million and expected to grow beyond 1 billion by 2030. In fact, India would be the 25% supplier to the global's human capital by 2030. We see that, we heard that the developed world population is aging, where India has got a young demographic and a young population. It's not just about the numbers, it's also about the quality of the human resources, and India now stands globally on an innovation index at a level of 40. This has been a 41-notch improvement in the past 7 years. If we look at India's ease of doing business, this is very important because we as foreign investors, what do we expect? Do we expect only the return on capital? Globally, there is a competition for capital. We also want ease of doing business, less bureaucracy, respect for as an investor, and we want the stability, we want the rights as our investors, we want the foreign currency stability, and we want the ability to repatriate our investment principal and the returns back. On all these fronts, in fact, India has been making phenomenal progress. Ease of doing business index in India now stands at 63, which is actually a more than 79-notch improvement in the past 5 years. Now, what other factors are going to facilitate the India? When we look at the India's level of private debt to GDP, it is in kind of mid-50s. When we look at China, it is 185%. When we look at South Korea, because we are talking about emerging economies, it's 165%. So that indicates that India has got an ability to lever itself to fund its scope, fund its future investment. India at 100, and Kuwait Vision 2035. They have multiple areas where the respective visions are aligned. Kuwait Vision 2035 talks about diversifying the economy, making the economy as a regional hub, and even under the Kuwait National Development Plan for 2020 to 2025, there are various areas relating to privatization, fostering the dynamic private sector, building the infrastructure, improving the health care and the well-being, and human skills development, food security. Now, these are very important areas where there is a tremendous scope and potential for cooperation between India and Kuwait. When we talk about the oil and gas front, by 2030, India's gas demand is expected to double. Its oil demand is expected to grow by 2 million barrels per day to 6.7 million barrels. In this panel, we will try to explore the potential for cooperation between India and Kuwait by drawing upon the experiences of the esteemed panel members. Please join me in welcoming Mr. Padmanabh Sinha, the Executive Director and Chief Investment Officer at National Investment and Infrastructure Fund, India, Mr. Rajat Kumar Saini, the Director of Department of Promotion and Industry and Internal Trade, Government of India, Mr. Pankaj Tandon, Joint MD and CEO of Jackson and Head of the Confederation of Indian Industry Delegation, Mr. Faisal Arsarkhu, the Chief Executive Officer of Camco Invest, Mr. Ali Hussain Khalil, the Chief Executive Officer of Markaz, and Mr. Abdul Aziz Al-Lugani, the Chairman and CEO of Flowert, at the stage with a big round of applause. Good afternoon again, ladies and gentlemen. May I request my fellow panelists to introduce themselves. From right, Mr. Paddy or Padmanabh Sinha from NIIF.
Yes, thank you. I'm with NIIF, the National Investment and Infrastructure Fund, and I've been in the private equity space for about 2 decades. I also helped build out Temasek's India business and spent some time with them regionally as well. And I was an internet entrepreneur prior to that at an EdTech business, which was funded by IFC and News Corp, among others. Thank you.
Thank you, and good afternoon. I am Rajat Saini. I am Director of Investment Promotion and FDI with the Government of India. And I am a bureaucrat for last 16 years, and there is nothing more to the introduction. Thank you.
Good afternoon. I am Pankaj Tandon. I represent CII and also my company Jackson Limited, which is into as a CEO and joint MD, which is into distributed energy, renewables, and the new sustainable energy models. I have been with working for the last 3 decades, a few years, more than a decade spent in Southeast Asia, South Asia, some parts of Europe. I have been having experience in tires and transmission, distribution and infrastructure business. Pleasure to be here with all of you.
Thank you. Good afternoon. Faisal Sarkho. I am the CEO of Camco Invest, which is one of the largest asset management investment banking businesses in the MENA region. And operations basically in different countries, Saudi Arabia, UAE, Kuwait, Turkey, Egypt, managing over nearly $14 billion in different asset classes of AUM, plus investment banking and brokerage.
My name is Ali Khalil. I'm the Chief Executive Officer of Kuwait Financial Center Markaz. I've been with the group since the 80s, so for quite a long time. Markaz is an asset management and investment banking firm. Personally, I spent most of my professional life in real estate and investment banking before I became CEO at Markaz.
Good afternoon, Your Excellencies, esteemed guests. My name is Abdul Aziz Al-Lugani. I am the CEO of Flowert, which is the preferred online flowers and gifts destination in the MENA region, as well as the UK. We operate across 9 jurisdictions, 9 markets, and currently employ around 1,200 people. I've been investing and operating in consumer internet maybe for the past 15 years. Come from both private equity and venture capital background, and really proud to be probably the youngest in the panel, but I'm really proud to be trained and mentored by all the 3 gentlemen on my right over here, Sunny, Abu Badr, Abu Hassan. Shukran.
Thank you, everyone. So my first question is to Faisal Sarkhu. Faisal, you manage about 14 billion across various asset classes and jurisdiction. How much have you allocated to India or Indian-focused strategies and investments? And the second leading question is that what messages you have for the empowered delegates from India to assist you in growing your allocation to India-focused strategies?
Yeah. I think, first of all, I'd like to say thank you for having this opportunity, because it's very important, as His Excellency, the Ambassador mentioned, and a lot of the delegates mentioned, information, and in our business, information is important and critical. So having such sessions where you get to calm down, get out of your daily activity, your focus areas, and come and listen and see the opportunity. And I think from what I've heard today, hoping to get, of course, some of the presentations as well, is to get to know more, get to have more, our teams to know more. Because if you look at most investment companies, and we're not excluded, we're, at the end of the day, we put plans, we build products that take time and move into these areas. As Camco, Camco today stands as a combination or a 25-year-old business that came out of actually being an investment house at the investment department of KIPCO in 19. I don't know if is it okay? Sorry, it was an investment department. Became a company in '98, listed in 2003. Grew double-digit in terms of AUM, and in 2019 also had inorganic growth by acquiring Global Investment House, merging it under Camco. Global Investment House had more activity in India. Basically, in the private equity space at the time, they had 5 investments that generated 1.5 times upon exit in a period of a few years, which, of course, it makes the difference how many years, but 1.5 times at the time. They had invested in real estate. Camco standalone was also invested in the equity side as part of its emerging strategy. So until today, we manage in excess of nearly $4 billion of client AUM in the equities, public equities space, whether it's in funds, discretional mandates, different kinds of active management roles, and we do have an allocation. And speaking with the teams, which we do, we have specialized people handling our different asset classes. The equity side has always looked favorably in the emerging market space into the Indian and equities in terms of looking at it. Now, is the size big? No. I think the more information that comes across, the more understanding, the more the ability to navigate in these markets, the more you will see investments coming into the secondaries and into the primary side. It's a different matter, the private side and how that is done. But also, I'm happy to say we launched a VC fund last year that was really focused on the developed world, and we did participate with Utsav Sumani, who's the head of AngelList in the AngelList India outfit, having moved from San Francisco. And I think that was, for example, our re-entry back into India. So for us as Camco, would I say we have major investments today? No. Historically, yes. Can we have major investments moving forward? Potentially. Talking about some of the projects that were mentioned, whether it's in the infrastructure, defensive sectors, healthcare, we have the ability to navigate in all of them because we have clients in all these business lines. So I think for us, we're interested to learn more as Camco. And you mentioned, on the second question, or how do we basically get more understanding on the future and where we move. When we talk about, for example, infrastructure, there are a lot of questions. So questions can come, today we're in a highly competitive world. So if you look at infrastructure, even the GCC is competing for infrastructure money. Tax exemptions, free zones, I sit, for example, on the board of Kadiba, and I know that even Kuwait is taking all the initiatives it can to invite investors to come into Kuwait where it possibly can. So it's important to understand the competitiveness because options for investors are there. The second is the structuring and the tax environment, because that is one of the things that sometimes, or most of the time, investors worry about. Of course, currency is another issue because, Kuwait has a stable currency, and the biggest issues that face investments that are made from Kuwait abroad is the impact of the currency. I know the answer sometimes is in hedging and issues like that, but it's very important to understand those dynamics moving forward. And of course, the ease of doing business, which I think the more Kuwaiti investors understand, more can be in it. I'm sorry if I took long, but I just thought these are some
Thank you, Faisal. Very useful. In fact, what Faisal said is three things. One is the company has made investments in India, but they are small in size. But definitely there is an interest to understand more where those investments can be made. The second question he raised is about the infrastructure, the structuring of the infrastructure, and the competition for the infrastructure, and last but not the least, the ease of doing business and currency, etc. Maybe I'll ask Padmavan Mishra to first start with, give us more, enlighten the audience and the panelists on where are the major areas of the new investment in India, in the new manufacturing, in the healthcare, in the technology, and in the agri industries. And then I'll come to the other. Sorry, go ahead.
Is this audible? Yeah. Okay. Sorry. Yes, I think before I come to the sectors, maybe I think one of the points Faisal made about currency, and that's an issue that comes up frequently. If you permit, I can just give some quick thoughts on that as well. Is that, from 2016 onwards, I think the currency fluctuation in India has moved to a different sort of magnitude. Should I switch this off? Is this better? Hello? Yeah, so the currency. Yes, I was saying that the inflation differential India had with, say, the US, since Kuwait, I think currency is pegged to the dollar, and that's what matters. What used to be 5% plus about a decade ago till 2016. And 2016 is when the Indian Central Bank put in place a currency target of 4% plus minus 2%. And largely the inflation rate has stayed within the band through this period, including with the global spikes in inflation. From 2016 to about 20, the inflation differential for India versus the US is about 150 basis points, or 1.5% only. And in the last couple of years, actually, it's been almost the similar inflation rates. So, yes, versus US dollar, a lot of other currencies, including, while Indian rupee has become much more stable and become the stronger currencies versus the US dollar, there will be periods where I think it's fair to assume a 2 to 3% annual depreciation rate. And therefore, what we do when investing, and this has been the case when investing, for global investors in the past as well. Of course, the currency depreciation was sharper then. Now it's become much more stable. But on an annualized basis, you can assume a 2 to 3% depreciation of the rupee versus the dollar and take that into account. However, I think from a macroeconomic stability, things are much more stable. But there will be periods where the currency stays flat and takes a bit of a knock. Also, what we try and do is get vintage diversification in currency, and then a mix of businesses, some of which have hard currency earnings as well, which provide natural hedges on the currency side. Going back to your question, Sunny, on the industries of interest in India today. So some sectors like IT, consumer have always been quite successful in the Indian context, but I think there are more emerging sectors in the next few years which are particularly attractive. New age manufacturing is certainly one of them, given the whole reconfiguration in global supply chains and India's competitiveness in terms of labor costs. That's become a very attractive sector. And the government also has a bunch of policy support for sectors like manufacturing. For instance, the corporate tax rates for new manufacturing in India is only 15%, which makes it very competitive with anywhere else in the world. Then there's support for EVs in the form of FAME benefits. There's support for new sectors in manufacturing and production-linked incentives, which was spoken about earlier. The other is with growing middle class and growing aspirations of quality in terms of healthcare, education, food. Some of the social sectors we think are going to be beneficiaries in the years to come. So we feel that's attractive. Tech, of course, is a little bit of a known story, but there is continuous innovation, and the public tech stack is very helpful in terms of what commercially viable opportunities there can be sitting on top of it. And of course, in infrastructure, the interest in India is increasing. It's obviously an area where demand is not a concern at all. So whether it is within infrastructure, whether it is transportation, where we have investments in roads or airports, or it is in the new energy businesses, or it's in digital businesses like data centers, I think there is growth in these areas. So across sort of growth equity sectors and infrastructure sectors, we feel a fairly broadening base of investment opportunities. One last point would be that in all these sectors, the investable businesses for us, for private equity investors, is increasing because the formal sector is gaining market share compared to the informal sector, thanks to GST and a bunch of other reforms that have been done. The compliant sector, which is what we want to invest in, is increasing market share. So some of these sectors, even when the industry is growing at 10%, some of the businesses in these that we back are growing at 15, 20, 25% as well. So that would be my response on the sectors of interest.
Thank you, Padmavan. Maybe I'll ask now Pankaj to share his experiences and flows of FDI into India with sectors, and how much has been coming with sectors, so that our Kuwaiti side of the investors can get a comfort on where exactly the India is moving on the FDI front.
So, Sunny, thank you. See, I think the data Asta had given and my other co-panelists, they are having better handle on the data on FDIs. But I would say that today, since we are talking about the opportunities, I would say what are the opportunities where the FDI should, we are sitting here, we can be bringing, and what will add a lot of value. Now, we have gone through the discussion today. India itself, when we talk about, we are bringing investment for a market. India is the largest market in terms, we have seen like demographic, we have seen in the upper middle class moving to urbanization, and markets are getting created across the sectors, whether it is power consumption, whether it is your household appliances, whether it is the food, whether it is premium products. Now, that is another set of way of seeing things, how the upwardly mobile population is consuming. So the consumption is increasing so much. Now, we were talking about the formal and informal economy. After some years, India will be everything will be formal economy, because with the digitization, every transaction is getting captured somewhere. So more and more transparency, more and more digitization will bring the informality, convert to formal sector. So the investment, what I see, which is and also coming, like we have seen the startups, when we talk about the startups, they are multiplying by, every few days one unicorn is getting created in 9 or 10 days. Now that is great opportunities. One big opportunity which we miss is the project exports from India. Now if you see globally, Indians are doing project exports, and especially another continents which are into that stage of infrastructure development, which is Africa. Now that is another segment where the investment will yield a lot of value, where that will, for whether there are projects which will asset creation, whether it will be big projects like what India is going through today. Tourism led infrastructure is another dimension which we can see where it is important, whether it is ropeways, whether it is the new connectivity projects. So my take will be these few segments and sectors. Fifth one is where you can address the supply chain. Now we have market here, like for example, Gal. We have seen last 2-3 years how one element, broken supply chain somewhere else, has created havoc in supply of even mobile telephones, or maybe the batteries were not available, where the semiconductors or the chips created, the shortage of supplies. So that is another sector where we can see that being manufacturing impetus given in India through the policy, as well as the cost, the labor, the skill development, whether the ease of doing business, we can create those manufacturing, the investment should go to those manufacturing setup which can help the global supply chain efficiency.
Thank you so much, Pankaj. So what Pankaj has highlighted is that how the Indian projects experiences can be exported and how they can affect and impact positively the countries in which those are exported. Maybe I'll ask now Ali Hassan Khalil, who is the head of CEO of Markaz, and you provide B-scope solutions, M&A, and various advisory services to investors in Kuwait. So where do you think an opportunity exists in the cooperation between India and Kuwait, particularly on the manufacturing side and on the project side?
Thank you very much. Let me see if this can, all right. I mean, from an advice point of view, I cannot repeat, I don't want to repeat what was said before. The Kirby case is an obvious case. We're talking about production quality, we're talking about efficiency, availability of talent, cost advantage, the proximity to India are all these cases that are conducive for offshoring operations in India and serving the Kuwaiti market. I think it's going to be very difficult to compete Kuwait as a manufacturing hub to compete with India, undoubtedly. There is another phenomena happening here in Kuwait, which is, I would call it, being politically correct, rebalancing the workforce, which is for obvious reasons. We have a growing population, there is pressure on Kuwaitization, and I believe in the service industry, we're looking also for the case of outsourcing, especially for the process skill-based jobs. We do that, and we're likely to see more and more of it. I go back to what Faisal has said. First and foremost is awareness. I mean, awareness is key to creating opportunities in India. But that's from an operational point of view. Financially, I would like to also add a little point here. Financial investments in India has been going on for a very long time from Kuwait. But typically, it's been limited to the large institutions, the KIAs of this world, Kuwait Fund, PIFs, and some of the very savvy financial families who already have exposure to India. As you heard Mr. Daral Ghanem before, this has been going on since the dawn of times, the relationship between India and... but it has been limited for the other family offices by what has been offered by the local reputable financial institutions, and also by the internationals bringing in opportunities here to Kuwait. I think this, as we see transition in wealth to the newer generation, there will be an appetite for quote-unquote unconventional asset classes and investments such as private equities in unconventional markets. Typically, we like US, Europe, and India, I think, is coming in. I mean, we at Markaz, I remember in the late 90s, the first strategic relationship we built, we started our private equity investment program back then, and one of the early association we did was with Trust Company of the West, which had a joint venture with ICICI through TDICI, and we invested in a private equity fund, and we promoted that here in Kuwait. So it's been ongoing. I feel that a lot more to come. especially in areas like infrastructure, as Faisal and yourself said. We feel there are other opportunities, which I can talk about later in real estate, that will attract our attention.
Thank you, Ali. In fact, as far as the real estate is concerned, both you and your firm, you have invested multi-billion dollars into the developed markets, USA, UK, and developed Europe. So how do you see the real estate opportunity in India? Because we would have seen from the Invest India presentation, the office space, the manufacturing, the A&B, warehousing is all going through a great boom. And the Indian real estate is expected to be a 1 trillion in sector by probably 2030, and it's attracting a good amount of FDI.
You're spot on, Sani. I think you're spot on. I started in real estate in the late 80s in the US as a subsidiary for Markaz. Let me give you just numbers. In the past 5 years, we've built, we've developed, leased, and sold about over $2 billion of industrial warehousing, logistics, real estate, both in the US, Europe, mainly US, Europe, primarily. And numbers are about 7 million square feet of warehouses. And what we were doing is we were betting on the transformation. We initially started when we felt that there was a transformation in the retail sector. Later on, the reshoring basically took off again in the US around COVID. And actually, it was reinforced also by the Ukraine-Russian war. So that we feel there is an impetus moving forward. I feel that logistics in India is going to benefit greatly in the next few years. I'll just give you numbers. India has been averaging about 30 million square feet of absorption over the past 5 years. There is a deficit between the demand and the supply, serious deficit. I think it can be filled. If I compare that with Europe, which is not growing as fast as India, it's 300 million square feet. US was about 280 to 90 million square feet in 2022. So we feel that there is a huge catch-up. Dallas is 30 million square feet. Houston is 30 million square feet demand per year. So that can give you a little bit of benchmark where we are seeing that. For this to happen, I believe very simply, what we are looking for, whether it's in logistics or infrastructure, we're looking at an internal rate of return net of taxes that exceed that of Europe and the US. Typically, we look at about 300 basis point spread in order to make it attractive for us. For this to happen and for people to go in, you need access, structuring, as Faisal said, you need efficient structuring, you need the ability to manage, and most importantly, you need to be able to exit efficiently. In our business, we do underwrite risk and uncertainty, but we hate to underwrite unknowns. So awareness, clarity of laws are extremely paramount. Our partner, one of our 5 partners, has already entered India in a big way, and I feel that we will follow soon in that area.
Thank you so much, Ali, for this. Rajat, you would have heard, Ali, the interest into the Indian real estate sector. Maybe it would be good to enlighten the audience and the panelists on what has happened as far as the FDI inflow into the real estate sector is concerned. What are the structures under which the foreign investors can come? What is the REITs structure now? And most importantly, as he said, when the foreign investor exits and wants to repatriate his capital and the invested profit, how does that system operate in India? I'm sure there are a lot of positive developments. I think it will be good to hear from you.
Yeah, thank you, Mr. Bhatia. So, as far as real estate is concerned, the policy position is in construction and development, the sector is under automatic route. There is no government approval required. And the limit is also 100%. So there is absolutely no regulatory regime per se where we need to take permission or anything. There is little bit of lock-in period for some things, but that has not been seen to be a hurdle. In previous experience, that is not been seen as a hurdle for investment. Moreover, what Mr. Faisal said about information, I believe that government's role is removing information asymmetry and reducing transaction costs. So we have made available online over internet our whole pipeline of investable projects, our whole pipeline, national monetization pipeline also, where projects of around $100 billion are already there from 2022 to 25, and all these are operational projects. These are not greenfield projects also. So there is a whole big chunk of information available and a whole big database of projects which are available for monetization. Now, apart from information, what you said about REITs and InvITs, so these are two very good solutions that have been brought about by government, real estate investment trusts, as well as infrastructure innovation trust, InvITs? Sorry, infrastructure investment trusts. So these are there both to protect the investors' interest and also to have even the small investments. And we have been seeing a lot of interest in last few years in both these structures. Mr. Sinha may be able to tell better that very big funds have invested through these structures in the market, and government as well as investors are bullish for next few years, especially in real estate construction and development sector, for the reasons which are very well told by you and Mr. Sinha also said. So overall, regulatory regime in infrastructure sector is encouraging, and we foresee a lot of movement a lot of positive movement in this sector. And I would also add one more point. FDI has seen, so FDI overall macro picture was very well put out by Astha. But if we go into the finer nuances, construction has been one of the major sources of FDI over past few years. And not just construction, I would say even the manufacturing sector in just 1 year between 2021 and 2022, we saw almost a 73% increase in FDI. All the sectors where PLI scheme is there, which was mentioned, which was for manufacturing, all the sectors apart from those which were impacted by semiconductor shortage, we have seen an increase in FDI. So all these policy initiatives are giving result number one, and now we are seeing the symbols, we are seeing signals that yes, results are coming.
Thank you so much. Actually, one important thing which both of you raised was the fact that your investors are now actually looking at India beyond the private equity investments. So which means that the direct investments, either at a controlling stake or a growth capital investment. So how do you feel about the B2B interactions between Kuwait and Indian businesses, and where do you think our empowered delegates from India can assist you in making that B2B interaction more proactive, more knowledgeable, more informative, for taking your investment intent to the next level, where you can actually start looking at the specific investments? So maybe Faisal or Ali, any of you want to comment?
Sorry, I have put it on. So I think it comes back to the point of information and getting to know more and more. Now, we have to keep in mind that always investors will look at things with a wary eye. So whenever you come, if you're, when we started talking about the real estate or Markaz's real estate story, Kamco's real estate story is different. We started in 2017. Today we have in our books around $2 billion of AUM, client AUM. When we started, having had zero exposure in that area, we could not take development risk. So if I had someone come to me and say, you're going to be developing something in the US or something in Europe, I could not be convinced that I can do it. So we focused on a core plus kind of strategy, and we started with small investable amounts. Now we reach a stage where every transaction we're doing is reaching around $150 to $200 million. So I think we always will look at pilot projects, smaller projects, how we can start building up that traction. And also, if I look today towards my client base and I come and say, okay, now this client base is looking at the Core Plus, which is giving you an income and dividend stream. If I come and change and come and bring in development risk or move from equity to debt, that client base might not be completely the right one. So really, at the end of the day, there is a learning curve. And I think that learning curve means that we need to, I mean, I'm happy to hear, for example, you have these projects that are online. But this is the first time I heard it. I would have to come and sit with a colleague of mine. We would have to come and sit and say, Camco is MENA-centric now. Are we going to look at opportunities, for example, in India today, or are we going to focus? And if you notice, a lot of regional companies have started to refocus on their activities and come and look at, I call it the drive back to basics drive. Everybody's moving back to basics and thinking, what is in my control? What is under my eyes? And how can I do the best that I can do? So to be moving beyond that requires that kind of understanding and the support and understanding the framework. So it is true, it is B2B, but then again, it is also G2G to a certain extent, right?
Sunny, may I add something on your question? So I think what we try and do as through our funds is also facilitate this direct investment by the fund investors into opportunities, because for us, the goal is not just to raise capital in the fund, but since the government of India is looking at a multiplier effect on their capital, they contribute a certain percentage of the fund, and then they're looking at contributions beyond the fund by foreign investors. Our goal really is to sort of channelize these proprietary deal opportunities, and some of those we may have invested into previously, and therefore also provide additional comfort to the foreign investors that these are companies we are engaged in with our deep networks on the ground, and then also bring in some direct investments into these underlying portfolio companies. And that is a partnership which works very synergistically, because for some of the global investors who are seeking more direct opportunities, they get significant direct opportunities also by some participation in the fund. And partly, hopefully, the information symmetry issues and all are resolved because we are well entrenched on the ground and have a good understanding of businesses and people and management teams and industries on the ground.
Thank you so much, Paddy. So no talk about Invest India can be complete unless we start talking about the startups. India startups, now we know, are second only to USA and China. Is really booming. There are 3 Indian cities which are in the top 30 list of the global ecosystems for the startup. And no talk on the startups can be complete from Kuwait side unless we have and speak to Abdulaziz Lugani, who is a founder of Talabat and then Flowered, and he is the only Kuwaiti on, I presume, on Endeavor, and you also have the Faith Capital. So Abdulaziz, you have done several startups. You are also on the venture capital side, and you've established business. You've gone into the multiple rounds of capital raising. So have you, currently you are the CEO of Flowered, so in your business model, have you looked at basically leveraging upon the India's digital strength, India's knowledge economy to strengthen your business, to take it up to the next scale, or to build cost or other efficiencies in your businesses?
Thank you, Sunny. So when we started talking or reviewing the session points, right, it hits me in connecting the dots looking backwards is a lot easier, right? And it's really significant how much has India really contributed to what we're doing right now, yeah? We live in a 50 million population here in the Gulf, not just Kuwait, right? Of that 50 million, 8.5 million are actually Indians, right? Which is a significant, almost 15% or so of the said population. I realized with time, we operate in the gifting and flowers vertical online. For our biggest trading partners, this is a $1.5 billion market in the Gulf, right? Of fresh cut flowers per annum. And we realized in more than 80% of our trading partners are actually Indian nationals, right? This whole industry across the whole region is actually dominated by Indian nationals, right? We also realized of our total headcount, close to 12% of our headcount are actually Indian nationals. We realized in many of our florists, many of our product to tech resources, a lot of them are actually Indian nationals. In hindsight, if you look at how has India contributed to what we're doing, we think it's very significant. We're very fortunate and we have access to these kind of resources and have really made us one of the top gifting or top e-commerce destinations across the whole region, right? Well, that's, I think, something that we probably take for granted in this part of the world, but don't really comprehend the value of how much is India contributing to our economies, right? I think if you take that into consideration, well, how much have we really grown over the past few years? The e-commerce penetration in the Arab world is close to 2%, right? India is more than 3-4 folds of that, right? Internet access, so penetration is very high, purchasing power is higher, but India's flowers vertical is actually more than double the current 1.5 billion. It's close to $3 billion on its own. E-commerce penetration is a lot higher. So we think that there are plenty of other opportunities for us to explore with India on 3 key fronts. For starters, we're the largest flowers procurer in the Arab world. There's plenty of room for us to really explore supply opportunities from India, be it from flowers, it's the accessories, the vases, wrapping paper, ribbons, as well as other gifting categories that we actually supply to our customers, right? Part 2 is on the resources side of how technology is changing our world. We're very familiar and aware how much is India contributing to technology globally. Especially in these really weird times we're in, there's a very thin line between artificial intelligence making our lives easier versus AI taking over the world, but not in the best way, right? But I think we need to be very conscious and we're very mindful how much India really has a firm grip on that emerging technology going forward. I think the last part for us is really looking at India beyond the region. Yes, we operate out of 9 markets right now, but we think there are a lot of synergies, a lot of joint cultural tradition, values between the Indian population and the population here in our part of the world. We can see that very much embedded even in our traits, in our language, our food, our traditions. I think there is a lot of room for us to explore that third angle of how the Indian market looks like. What is it really for us? What are the established players over there? And really hope later on this could be a stepping stone for Asia as we explore later on.
Thank you so much, Abdul Aziz. Abdul Aziz highlighted a very important point, the concept of bonding between India and Kuwait as a result of the human connection. We heard His Excellency, Mr. Dira, talking about how historically it goes back. Maybe I would ask the Indian panelists, any of them, to comment on, he raised 2 important things. One was on the AI and the grip of India on the AI. So what are the areas where the startups or the digital businesses in Kuwait can benefit from the India's AI experience? And the second and the easier bit was for their core operating businesses, the import from India. So I think let's go to the first one, which is the AI side and the digital side. How can the Indian businesses assist them in their next growth phase?
I don't have any specific view on this. It's like a lot of other IT services and tech where India is sort of a back office to the world. I think a lot of the innovation in AI, etc., is also being done in India. But nothing specific that I have to suggest on leveraging Indian AI talent here.
So I can say, Sunny, there is a incubation cell in ISB, and there is a group called NeuroPixel. Now they are into AI they've just started, like for dressing, for the clothes. You create a picture and then you can see what type of dresses will be looking good on you as a fabric. So that is the new starting point. I'm just saying these offshoots, or rather these small sprouts have been visible now. It's too early for getting into, a lot of work is happening around the world, but there are group of people who are working, especially in the retail sector, on such initiatives.
I'll just add the government bit to it. So under the Ministry of Information and Technology, there is a specific policy for AI related policy, by which we are trying to guide or not regulate, just setting the boundaries how it is to be done. There are a lot of new startups that are being registered under our ministry only, under the mission called Startup India. And a lot of these startups are for AI and those things. And in terms of skilled professionals in AI, a lot of educational institutions in India have started taking up courses, one within their campuses and also through online mode of teaching. So there is a whole lot of manpower available in this particular sector. So that AI is going to boom or is booming is obviously a foregone conclusion, but I believe that the skilled manpower, a lot of it will come from India. And again, the government policy in this field is to encourage these startups which are in this field.
Please.
I just want to add one thing. What Abdulaziz and his colleagues have done with Flowered was more than remarkable. And it's quite an exceptional business model. How realistic it is for such business models to enter India. This is one. Two, what I wanted to say, to follow on what Abu Badr Faisal said earlier, he's on the board of KEDIPA. We were involved early on with KEDIPA. I believe also to strengthen that and create a culture of cross-border collaboration, how realistic it is for Indian businesses to come in and set up business in Kuwait. I understand there were hurdles in the past, pre-KEDIPA, but now with KEDIPA, things have been quite a bit facilitated. So these are kind of two separate questions.
And just to add as well, you have a strong historical connection and a lot of merchants in Kuwait from India. So this is very important.
Maybe I can just respond to that. I think that in addition, the geographic proximity also helps. So one area that comes to mind is food and agri, in food processing. India is a large exporter of fruits and vegetables, and we are seeing businesses which are really sort of harnessing technology and superior logistics and sort of tracking the traceability of the food to the origin, which is the farmer producer organization. So the government has set up something called a farmer producer organization, which with support from the government, which provides scale in dealing with the farmers, which are otherwise very fragmented in India. So you could have businesses like that where they could set up in Kuwait, for instance, and help for Kuwait with food security and India for exports of some of the segments where they are a competitive exporter. So there are opportunities around a few industries like that, for instance. I think India exports, produces about $400 billion is produced, so it's a significant sort of exporter.
Thank you so much. Sorry, you want to say something?
To comment on Buhassan's note, so India is a very established market when it comes to online flowers and gifts. There are very established players. I was just showing Bubadir earlier a message from one of the largest actually players in India. And I think the business models are very different. The economics are very different. In this part of the world, we have unparalleled economics, at least currently. Instead of looking at India as a whole, what we're doing is actually focusing more on particular cities, right? Then if you look at the macroeconomics, they might not be indicative of particular areas around India or even in the Arab world as well, right? So that's what we're currently honestly looking at. And you caught my attention earlier whether the particular traits or bond that's with Indians. I recall I actually can only write my name in Arabic, English, and Indian. I still can write my name in Indian.
Thank you so much, Abdulaziz, and thank you, everyone. You must have seen that how the time has gone. All the fellow panelists, we had a lot to talk, and we are still not done. But this shows that how much opportunity exists in cooperating between the two nations and understanding each other better and doing better businesses. Maybe a couple of minutes on questions, or should we wrap up now? Maybe I'll leave the floor open for one or two questions if possible. If anyone wants to raise any questions to our delegates from India or panelists from Kuwait. Well, so this means that we are between the lunch and the... So thank you everyone for giving us time, and thank you all of you for being a patient audience. Thank you so much.
Ladies and gentlemen, since I have bugged so many of you for since the beginning of the concept of this investment conference, so it's only right that I get to say a few words of thank you to each one of you. So let me just take this opportunity on behalf of the Embassy of India to say my heartfelt gratitude to all our distinguished speakers today. His Excellency Mr. Muhammad Al-Anizi, Under Secretary, Ministry of Commerce and Industry, His Excellency Mr. Ghanim Al-Ghaniman, MD Kia, Mr. Dirar Al-Ghanim, Ms. Wafa Al-Katami, Board Members of KCCI, Mr. Saleh Al-Salmi, Chairman UIC, our distinguished speakers who have shared experiences in India, which gives a concrete context to all that we had discussed today, Mr. James Minato, Mr. Dari Al-Bada. I am extremely thankful to our moderator for the panel discussion today, Mr. Sunny Bhatia, our esteemed panelist, Mr. Rajat Kumar Saini, Mr. Padmanabh Sinha, Mr. Pankaj Kumar Tandon, and Mr. Faisal M. Sarku, Mr. Abdul Aziz Al-Logani, Mr. Ali Hassan Khalil. Thank you so much for giving us a 360-degree view on the investment landscape in India today with perspectives from all stakeholders involved. And of course, all of this would not be possible with our co-organizers. The team of IBPC had been involved since the very concept of this event, and Mr. Lamba and his team, with their energy and enthusiasm, have made this possible today. A big round of applause for them. I'm also thankful to KCCI and UIC for their support and cooperation in organizing this event. A special thank you to our media fraternity who have come here and been very supportive to us. Thank you to the Hotel Four Seasons. And of course, thank you to my team in the Commerce Wing of Embassy of India and Ambassador, His Excellency Dr. Adarsh Swaika, for his support and guidance and leadership for making this possible. Thank you all, and I request you all to join us for a lunch at Elements Restaurant on the 4th floor. Thank you, each one of you. Thank you.